Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Jason Reynolds, and today is the 12th of July of 2023. Today we're going to talk about a hot topic that's affecting many of us, the current state of the U.S. housing market. As we know, the last year has seen significant fluctuations in housing prices across the nation. Some markets have seen soaring prices, while others have actually experienced dips. The increased cost of living, paired with predictions of a housing market crash, has got a lot of people talking. While the Federal Reserve continues to hike interest rates to combat inflation, we're seeing a boom in the housing market, especially in some cities. Mortgage rates have risen over 7%, which is more than double the average rate for a 30-year mortgage at the start of last year. Despite these rising rates, the housing market is proving resilient. Interestingly, while the national trend is towards price growth, some areas are witnessing a dip in home prices. For instance, Austin, Texas, has seen an over 8% decrease compared to last year. San Francisco, one of the most expensive cities, experienced a 13% decline in house prices over the last year. Meanwhile, there are cities where home prices are increasing dramatically. Florida, for instance, has seen a 5% increase in home prices compared to last year, with cities like Weston and Miami having the most expensive homes. Another state where home prices increased rapidly is Connecticut. The affordability of these homes has definitely been a concern. But amidst these high prices, who are the ones actually buying homes? It seems that a big part of this boom is being driven by cash buyers. These individuals, many of whom are baby boomers, are circumventing the mortgage process entirely and purchasing homes outright. This demographic has a significant influence on the market, partly because they're helping younger generations onto the property ladder. If you're a millennial, chances are you're either being financially supported by a baby boomer or you're one yourself. The median home sale price is higher than ever, which can be a significant barrier for first-time home buyers. But with baby boomers making up 39% of home buyers and transferring housing wealth to the younger generation, they're an essential factor in keeping the housing market buoyant. So, where are people buying? Well, it seems that suburbs are ruling the roost. Metropolitan areas like Miami, Chicago, and Atlanta are seeing the highest year-over-year gains. But with an increase in remote work and millennials starting families, the suburbs are proving to be more attractive. Remember those days when we used to think millennials would never move to the suburbs? Well, turns out the appeal of space, a home office, and a yard are too hard to resist. Now we're seeing a resurgence of suburban living. This traditional housing cycle of moving to larger spaces in the suburbs as families grow is proving to be consistent across generations. Looking at the bigger picture, it's clear that the housing market is in a state of flux. It's being shaped by a multitude of factors, from generational wealth transfer and remote work trends to regional variations and inflation. As we navigate these changing waters, it's important to stay informed and take these trends into account when making financial decisions. Whether you're looking to buy your first home or invest in property, understanding these shifts can help you make the best choices for your future. Remember, the housing market is just one piece of the financial puzzle. It's important to consider all aspects of your financial health and goals when making major decisions. That's all we have for today's episode. Join us again next week when we delve into another compelling financial topic. As always, if you have any questions or comments, feel free to reach out to us. Thank you for tuning in, and we'll see you next time.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.